Okay, let's jump into this deep dive. Today we're looking at something, well, pretty fascinating from the sources you shared. It's this idea that Bitcoin might actually be undervalued, even though it's flown past US $100,000, which, for many people that just sounds like the peak, like game over. But this material argues we should probably look a bit deeper.
That's exactly right. And our goal here is really to unpack the arguments, the data that runs through these sources. They're making a case that Bitcoin's current price tag, high as it is, might not capture its, let's say, structural or strategic value. And just to be clear, we're not predicting prices short term. Not at all. It's about exploring the fundamentals, the trends the sources are pointing to, comparing it maybe to traditional assets, looking at global factors. We want to help you navigate what these particular sources think is most important here.
Okay, so where do they start? How do they begin to build this argument for, well, potential undervaluation?
Well, they really start at the foundation, the absolute bedrock of its design, Bitcoin supply. The key thing they keep emphasizing is its absolute, and this is important, inelastic scarcity.
Inelastic scarcity. Okay, what do they mean by that exactly?
So they point out it's hard capped, right? 21 million coins, full stop. But the inelastic part means that cap, and also the rate new coins are made, it's totally unresponsive to demand or price. Think about, say, gold. If the price of gold skyrockets.
Yeah, miners will dig up more, find new veins.
Exactly. It incentivizes more supply eventually. With Bitcoin, the sources stress that new supply rate is fixed. It gets cut in half roughly every 4 years, the halving. Doesn't matter if the price is 10 or $1 million. And this predictable, verifiable scarcity is presented as just a unique monetary feature, a key driver for value if demand grows against that fixed supply.
Okay, fixed supply, that makes sense. But value needs demand too. So where do the sources see demand coming from, especially looking forward?
They highlight, broadly, two big areas. First is its growing use as a real store of value, particularly for individuals, in economies facing significant instability.
Right, you see the headlines, places where the local currency is just getting hammered.
Precisely. The sources bring up examples like Argentina, Venezuela, Turkey, Nigeria, places like that. And people there, they argue, aren't just speculating, they're using it as a tool. Trying to preserve their savings against runaway inflation, or maybe getting around capital controls. It becomes almost a practical need, financial survival.
And then there's the other side, the institutional angle. That feels like a really major shift, doesn't it, compared to just a few years back?
Oh, absolutely. The material really digs into the speed of institutional interest picking up. They talk specifically about things like the regulatory green lights, like the U.S. spot ETFs, that just opened the floodgates for huge traditional players, BlackRock, Fidelity.
Yeah, the big names.
Exactly. And we're also seeing corporations, maybe not loads, but some, putting on their balance sheets. Tesla was an early example. This growing acceptance, the integration into traditional finance, is presented as a huge and maybe still developing demand source, bringing potentially vast capital pools closer.
This whole value discussion inevitably leads to that comparison the sources make constantly. Bitcoin versus gold. Gold's been the standard safe haven forever, but the argument seems to be Bitcoin has some, well, real advantages now as a store of value.
Yeah, they list quite a few potential advantages for the digital age. Things like it's instantly verifiable anywhere you have internet. It's highly divisible, super portable across borders. I mean, try flying with a heavy gold bar, right?
Yeah, good luck with that.
And no need for costly physical storage or vaults.
Yeah.
But a really core difference they circle back to is that scarcity we talked about.
Yeah.
Gold supply can technically increase. Bitcoins, they argue, absolutely cannot.
And the market cap comparison they use is pretty stark, isn't it? Even at $100 per Bitcoin, the total value is around, what, US $2 trillion?
That's correct. And the sources put that right next to gold's estimated market cap, which is somewhere around US $13 trillion, much bigger. So the implication they draw is, well, if Bitcoin were to capture even a chunk of gold's market share as a store of value, say half of it, its price per coin would have to go up significantly, maybe over US $250,000, just to match that relative scale. It's a way they frame the potential upside, purely based on displacing some of that established value store.
Okay, but beyond just being an asset, the sources also talk about the infrastructure, the whole ecosystem around Bitcoin. It's not quite the Wild West anymore.
No, definitely not. They really emphasize how the ecosystem has matured. You've got regulated exchanges now, proper institutional-grade custody solutions built for big money, and a growing suite of financial tools, futures, options, all trading on regulated platforms. This whole professionalization, the integration with existing finance and fintech, it's seen as lowering the friction for large capital to come in. And the argument is maybe that improved infrastructure isn't fully priced in yet.
What I find really interesting is this idea of financial sovereignty and neutrality. The sources seem to think Bitcoin offers something, well, unique there in today's world.
They do. They frame it as enabling direct ownership, holding value yourself without needing a bank or, a government intermediary.
Mm.
And in a world where you have things like financial censorship or sanctions or just geopolitical friction messing with traditional finance.
Yeah, access can be cut off.
Right. So being able to hold and send value independently is presented as a pretty critical feature. Plus, its decentralized nature, no one country or entity controls it. That makes it potentially a neutral global asset, something that becomes more relevant maybe when things feel turbulent globally.
And they don't just stick to qualitative arguments, do they? The sources bring in quantitative models, data.
Yes, they definitely reference quantitative approaches. Things like the stock-to-flow model get mentioned, which tries to map out long-term value based on, well, that scarcity relative to new supply. Now, models are just models, obviously, but the sources use them as one framework to suggest potentially much higher long-term prices, sometimes, hundreds of thousands, even into the millions, though that's very long-term. They also look at on-chain data, the public transaction ledger itself.
On-chain data, what kind of insights are they pulling from that?
Well, the sources look at metrics like how much Bitcoin is being moved off exchanges, possibly into cold storage. That might suggest people are holding for the long term, not planning to sell immediately, accumulation. They also look at things like the rising hash rate, the network's computing power, seeing that grow is interpreted as rising confidence in the network's security, its future. So these on-chain signals are presented as sort of real-time evidence, potentially backing up that bullish long-term view.
Of course, nothing's without challenges. The sources you shared acknowledge the hurdles too, right?
Oh, absolutely. They don't ignore them. They talk about evolving regulations globally. That's a big unknown. The ongoing need for scaling solutions like the Lightning Network to handle more transactions efficiently. The price volatility, which is still significant. Public perception issues linger. Even potential future tech risks like way down the line, quantum computing maybe. These are definitely presented as factors that could slow adoption or introduce risk. But the overall narrative in these sources tends to circle back to those fundamental properties and the bigger macro trends driving that potential long-term value.
Okay, so if we bring all these threads together, the case these sources are making is that Bitcoin, even at this high price, might be undervalued if you consider its core design, the demand drivers, the context.
That's essentially the conclusion presented in the material, yes. The argument hinges on Bitcoin's unique mix, that absolute scarcity, its growing function as both a value store and maybe a medium of exchange, this emerging role in financial sovereignty. It positions it, in their view, as a strategic global asset that's maybe undergoing a kind of structural revaluation. The gold comparison, the maturing infrastructure, the diverse adoption, it all feeds into this idea that the current market value, even past $100, might still be just a point along a longer trajectory towards its, let's say, true potential value in a global long-term context.
So thinking about all these different pieces, scarcity, demand, sovereignty, the tech, how does exploring all that change your perspective on Bitcoin? What really stands out to you from what we've discussed from these sources?
Well, the sources leave us with a pretty powerful final thought, I think, that sums up their view. They basically describe Bitcoin as maybe the first truly global, decentralized, mathematically scarce, and programmable asset we've ever had, all at once. And the argument they put forward is that in a world that seems to increasingly need things that are resilient, transparent, efficient, its full potential value probably isn't widely grasped yet or reflected in the price. They state pretty clearly, US $100,000 is seen as an end point, but maybe just an early stage in this bigger revaluation process, which really leaves you with the question, doesn't it? If this potential long-term revaluation is real, what does that mean for the future role of assets like this in the whole global financial picture?